This is a quick update. It's regarding my book, which I call it as Driving Through the Rule Book of an Investor. So it is just a book which I'm glimpsing in front of you, right? It's called Driving Through the Rule Book of an Investor. And as the book clearly states, it talks about fundamental and technical analysis. If I just rotate it for the audience, like so that they can have a mirror image for the same. So yeah, so it's written by me and it's available on Amazon, on Flipkart, on Kindle. It's also available on Goodreads and some of the offline platforms as well. So, if I just give you a brief insight about my book and talk about the contents of this book, which is called Driving Through the Rulebook of an Investor, and talking about fundamental and technical analysis by myself, that is Maurya Hanspal. So, if I just open up the contents and give you a glimpse for the same, so this is my content page. And here I'm talking about introduction to fundamental analysis. The first topic, as we talk about introduction to fundamental analysis. The second topic is ratio analysis. Third one is valuation. Fourth one is the concepts upon enterprise value, market capitalizations, cash flow methods, and some different valuation methods. The fifth one, it talks about scientific indicators in fundamental analysis. The seventh one talks about some basic technical tools. Eighth one talks about some advanced, eighth and ninth chapters, they talk about some advanced technical analysis tools, some momentum-based tools, Fibonacci retracements, and some other technical analysis. 10th and 11th talks about some graphical interpretation of the technical analysis, candlestick starts, and different other advanced technical tools which a person can use towards his analysis. Right. So here what I have done, when I talk about my first index, right, the first chapter, that is fundamental analysis or introduction to fundamental analysis, here I've tried to make the people understand in the most practical manner I could. I've talked about how to read, analyze, interpret the results of the annual report of the company in detail, which parameters to analyze when we're trying to look into the annual report of the company, right? I've talked about the management discussion and analysis section, the popular section in the annual report of the company, as we tend to call it as the MDA part. I've talked about the CSR part. I've talked about the different types of the auditor's report. I've talked about the three, or not the three, but the four most important financial statements: the profit and loss statement or the income statement, the balance sheet or the position statement, the flow statement or the cash flow statement, the statement of equities, and the fifth one being the notes to accounts. All these have been discussed in each detail, each and every line item of the P&L, the balance sheet, the cash flow statement, statement of equities, and notes to accounts, of course. Like we share you about the important ingredients in the P&L, cash flow statement, balance sheet, and statement of equities. So the different index or notes number in the annual report. So all these I've tried to discuss in very detail, right? And where I talk about the ratio analysis, here I've tried to discuss everything in the ratio analysis. Everything from A to Z in ratio analysis from a practical perspective. Right. I've talked about multiple ratios and I have taken examples of two companies from the FMCG sector. Right. So no recommendation, just for informational purpose to make you understand things practically. How I'm trying to analyze the annual report of these companies in detail, how I'm trying to calculate the financial ratios of these companies in detail. Right. So all these things have been done practically because ultimately we need two companies for comparison within the same sector. I cannot explain anyone just for one company just in isolation. I need to compare my company with some other company in the same industry only, right? So I've talked about the business model analysis, how to talk about the business models, try to understand the business model, the moat model, economic moat models, different types of moats, right? I've talked about the growth model. I've talked about the compounded annual growth rate, how to calculate that, right? All these things have been talked about in detail, right? So here is just a view. So how is my book looks upon? You have both the black and white version and the colored version available online. So you guys can choose your preference. So here, if you just see are all the contents, right? All the contents and the material, correct? And to continue with the ratio analysis, I've talked about the liquidity ratio. So each and every ratio in the market, right? Be it from moneycontrol.com or be it any different kind of ratio, which you might not have heard about in the practical parlance. So all these ratios have been talked about in very detail: current ratio, quick ratio, retention ratio, dividend payout ratio, net profit per share, the return on assets, the return on capital employed, ROC as we tend to call it, EV to EBITDA, EPS or earnings per share, right? I've talked about the diluted earnings per share and the basic EPS per share, the difference between the two. I've talked about the debt to equity or the gearing ratio, operating margin, cash ratio, working capital and working capital ratio, fixed asset turnover, total asset turnover, book value per share, excluding the revaluation reserve and including the revaluation reserve, book value per share, including the revaluation reserve and excluding the revaluation reserve. What exactly is the revaluation reserve has been talked about. The dividend payout ratio, dividend per share, right? Interest coverage ratio. I've talked about the earnings yield, EV to sales ratio, price to earning ratio, the return on investment, price to book value, inventory turnover, the return on equity, proprietary ratio, dew point analysis, right? And I've also tried to bifurcate them into the different parts with the liquidity ratio, may like we talk about current ratio, quick ratio, cash ratio, net working capital. In capital structure, we tend to talk about debt to equity, proprietary ratio, interest coverage ratio, debt service coverage ratio. In profitability ratios, we tend to talk about gross profit margin, operating profit margin, net profit margin, return on investment, ROE. In activity ratios, we tend to talk about inventory turnover ratio, debtors turnover ratio, the creditors turnover ratio or the payables ratio, fixed asset turnover ratio, total asset turnover ratio. In valuation ratios, I've talked about EPS, book value per share, dividend payable, dividend yield, price to earning, price to book value, dew point analysis, common size analysis, all these things have been done. And if I just show you here, if you just see my book, I've made a clear cut table, right? So it's a clear cut table that has been made, right? A clear cut table has been made, and that shows the analysis of two companies having three columns. One has the ratio, one has the name of the first company, and the other has the name of the second company. So all those metrics have been calculated, they have been interpreted, whether a higher ratio is a good, whether why a higher ratio is good or why a lower ratio is a bad. For all these metrics, all these in detailed interpretations have been given for these ratios. So all this tabular analysis, which can make you simple to understand, with all those numbers have been clearly made if you just see the book. Right. Further, if I just go ahead, common sizing statement की बात हो गई. I've talked about provisions. Then I've talked about some of the technical jargon, some popular slogans in finance. I've talked about the discounted cash flow methods. See, the practical interpretation and the practical calculation of the DCF method, how to calculate it, how are we calculating those growth rate in cash flows, how are we calculating the discount rate, cost of equity, cost of debt, and with further encapsulates like into the WACC, right? And that's the cost of capital, right? The weighted average cost of capital, terminal cash flow, the internal rate of return, which exhibits proper calculation into these two companies, how to do it practically. Because most people tend to struggle because they have all the theory knowledge from different books and online sources, but they do not know how to implement it. And even if they try to implement, they just have some dummy companies, like which are not the actual listed companies. Some hypothetical numbers they have, some simple numbers they have, but the real life, it doesn't work in the same way, right? You need to do all these analysis upon actual practical companies, actual listed companies, like with their cash flows and returns. So all these tables, all these analysis have been done with two actual listed companies in the FMCG space to make you understand these things practically, right? Further, we have talked about the residual analysis method. I've talked about the relative valuation method, different multiples, EV to revenue, EV to EBITDA, EV to EBITDA R, where R stands for rent, EV to invested capital, your comparable company analysis, your precedent merger analysis, right? So all these things have been talked about in detail and calculated. So two companies analysis have been done by DCF method, by residual method, by relative valuation method. And all these multiples have been calculated manually, right? Further, we have calculated the enterprise value, the market capitalization and cash flow for companies and tried to interpret the same. Free cash flow ratio has been tried to find out why the cash flow ratio is the best indicator and the profit can be manipulated. I've tried to take examples of multiple companies and proven them with manual calculations and examples. So all these things have been discussed about, right? Price to cash flow ratio, talking about deferred assets, deferred tax liabilities, amortization, tax evasions, all these things have been clearly talked about. Free cash flow to firm, free cash flow to equity, how to use the valuation methods when we're using free cash flow to firm, discounting it by cost of capital, right? Like when we're using free cash flow to equity, then discounting it by the cost of equity. All these things have been discussed in very much detail, right? All this tabular representation, you see, all these basic tables, all these things have been done in the most basic manner to make you understand things practically. Price to earning ratio, PEG ratio, I've talked about, right? All these practical interpretations. I've talked about some scientific indicators. like the Graham number, the Altman Z score, the Buffett retention ratio, Charlie Munger's mental model, Tobin's Q. And so all these things I've tried to talk about. So for example, if I just talk about your Tobin's Q, right? I've mentioned it, the Tobin's Q tells us about the valuation of the company or the market overall. It takes into consideration two aspects, which include the market value of the assets in the numerator and the replacement cost in the denominator. If the value of this ratio is more than one, it indicates the market is overvalued. But if it is less than one, it states the market is undervalued. Just to give you a few headlines. So similarly, all these things have been talked about in the most basic manner and practically. Some related links have been shared from where you guys can learn even more, appendix and related links. And then we talk about technical analysis. We talk about the efficient market theory. We talk about the different market psychology. We talked about the Elliott wave theory, fractal investing. We talk about the grand super cycles, all these things that we like witness in the market. Dow Jones theory, right? Further, we also, and all these things have been explained graphically. So what's the major drawback in technical analysis is, and I also completely understand, guys would understand technical analysis till the point of time they aren't doing it practically in the market, right? They aren't buying and selling shares, trying to analyze tools and viewing those tools indicators and taking their bets in the market. So I've tried to overcome that drawback, at least in the 50 to 60% manner. So whatever technical analysis I did for these two companies in the fast moving consumer space, I took the screenshot from TradingView and different online websites of those technical part or those technical indicators, charts or candlesticks patterns, which were there at that particular point of time when I wrote the book with that date. And on the basis of that tool, whether I should buy and sell that particular stock. So all these, so this was the chart, right? Like which was on the moneycontrol.com, which I recreated on Excel, right? So all these things graphically have been created. All those screenshots, like you guys will be understanding the screenshot, these types of screenshots much more better, right? So these have been just copy pasted, snipped from these online sources so that you guys understand that this is the indicator. Like this was the time to enter into this particular stock entry point, right? So that you can take a practical implementation. Just see all these things have been tried to analyze. I've talked about the momentum indicators further, right? If I just name a few, I've talked about trend analysis, right? In momentum indicators, I've talked about stochastic oscillators, how to calculate that, and crossovers for choppy markets, right? Because we have different types of oscillators, stochastic oscillators, ultimate oscillators, right? The awesome oscillators, right? Contrarian and value investors views. I've talked about the moving average convergence divergence, the MECD as we popularly call it, signal lines. I've talked about the moving average crossover strategy, death cross, golden cross. I've talked about the RSI, right, the relative strength indicator, how to calculate that. All these things have been done practically for both the FMCG stocks and snippets being taken from MoneyView and from the different websites, TradingView per se, price rate change indicator, money flow index. I've talked about the Williams range, Trix indicator, Shanghai momentum oscillators, the Bollinger's band, some advanced technical indicators, average directional moving index, ADX as we popularly call it, your directional moving index, right? DMI as we call it. I've talked about price channels, commodities channels. I've talked about the Arun indicator, Gaussian channel. I've talked about the average true range, right? The quantitative wave. I've talked about the Cowries relative index, right? The relative bigger index. I've talked about the sentiment index, market breadth indicator, advanced decline index being very popularly tracked on daily basis, high low lows index, S&P day index, cumulative volume index, on balance value, Sharkin oscillator, Ichimoku baseline. I've talked about the back testing versus forward performance, paper trading, Fibonacci retracements, retrenchments, reversals. Practically see like all these snippets have been taken from the online sources to make you understand the research upon these two stocks practically. I've talked about line charts, I've talked about mountain charts, bars, open high, line break charts, bar graphs. Further, I've talked about histograms, how to calculate that, Kagi charts, Renko indicator, parabolic stop and reverse, inverted three Buddha bottoms in candlestick charts, right? Multiple candlestick charts I've talked about, neutral doji, long ledge doji, dragonfly doji, gravestone doji, bullish star doji, four price doji, hammer candle, hanging man candle, shooting star or inverted hammer. I've talked about the morning star candle, evening star candle, two black gappings and three black rows pattern, rising three methods and falling three methods, three white soldiers, bullish and bear hammer patterns. But I've talked about the bullish and bears engulfing patterns, spinning top candlestick patterns, More than 20, 30 candlestick patterns have been talked about. Piercing candlestick patterns, Heiken and candlestick patterns, Marubozu candlestick patterns, right? Double, triple top and double bottom top candlestick patterns, head and shoulders and reverse head and shoulder patterns, cup and handle patterns. I've talked about volume candles, stalled pattern, right? Further, if we go, I've talked about triangles, flats, peanuts. I've talked about the wedge pattern, rectangular pattern, central pivot range, true strength index, central pivot range I've talked about, and all those related links and finance codes, right? So it's a complete package for anyone who's trying to build up his career, like into the finance industry. The book is very ideal for anyone. Even a school student will try to understand such stuff because I've tried to break down the technical jargons in very easy to understand manner. And even if I've used some technical jargons that have been made and try to make you understand in the most simplest manner. The book is very easy to understand. It has all the related content, very ideal for the person who is a school going person. Even a graduate person can read this book. The book is also ideal for an MBA student or a CFA student, or someone who's off the finance background and wants to enter into the finance industry to make these things understand in a much easier manner. The book is ideal for anyone planning to build up a career in finance outside, like if a person is coming from a non-finance background and if he wants to understand the market, fundamental, technicals, valuations, he can try understanding it from this book in a very simplest manner. The book is ideal for anyone, a school student, an MBA graduate, CFA candidate, FRM candidate, or anyone who wants to start his journey in stock markets, right? The book is available on Amazon, Flipkart, Goodreads, on some offline local stores as well. Soon, the book shall also be available into the crosswords, right? The crossword chain and different other offline stores as well, right? Feel free to ask me any queries about this book. So this is my book, and here is the description about the book and the author. That is me, Maurya Hanspal. And yeah, so that's just brief understanding about the book, and I just wanted to communicate. Currently, I've sold more than 1,500 copies for the same. Different colleges like KG Samaya and Narsi Monji, the different branches of IBS, the ICFA, like in IBS Hyderabad, IBS Mumbai, have already purchased and kept my books in the library. And I really hope that everyone would be purchasing my book and giving me a review for the same, right? And if I really get a good review, I'll be happy to come up with a part two of this book with some more advanced technical concepts. So that is my take. Thank you so much, guys.